afternoon. Good afternoon, colleagues. My discussion is all about organization and function securities market. So, in this discussion, I will discuss the meaning of securities, what is market, its types, characteristics of a good security market, and the organization of security markets. So, what is the meaning of security? Securities are the proof of one's ownership or indebtedness in a company. So, securities are the one that meaning to say it is serve as your proof that you have owned a portion in the company. So best example niyan is the stocks are shares of the ownership or corporation, and share is the ownership of interest or the rights of the shareholder in the entity. Okay, so what's the difference between stock and share? So stock and share is has the same meaning. So pwede siyang gamitin both either way. But stock, for example, A owns share in Arsicola company and B owns stock. So share used for a specific company while used for any company. Okay, so bonds is a contract of debt whereby one party is called the issuer borrows funds from another party called the investor. So in bond, it is a contract of debt whereby the borrower has a financial liabilities from the another party, which is the investor. So what is market? A market is a mechanism that brings together the buyers and sellers to aid in the transfer of goods and services. Okay, when we say market, it is a place where the buyer and seller come together and transact with each other for the purpose of buying, selling goods and services. A market does not need a physical location. So, ibig sabihin nun, nowadays we use the word online selling. Okay, in selling goods and services, ang important that is the buyer and seller must be communicate with the relevant details of the transaction. So, one example of relevant details of the transaction is the what goods and services does the seller want to sell to the buyer, what is the quantity of the goods that will be sold, the terms of payment, and the exact price of the goods and services. So, types of market. Market are usually designated by types of goods or services that it traded. Hence, the foreign exchange market is where the currencies are sold and bought, where securities market is where all forms of securities are traded. Or in food market, okay, the seller buys meat, vegetables, and other forms of food. Okay, so security markets can be further classified into the following: money market, capital market, stock market, bond market, and derivative market. So when we say money market, the market for highly liquid short-term fixed income instruments such as treasury bills, commercial paper, and bank certificate of deposit. So the maturity of these stocks is less than 1 year. So this market design is for the short-term loans. The institution with temporary surplus of funds that meet the needs of borrowers who have temporary fund shortages. Meaning to say, the institution with such more excess funds use these excess funds to lend the other institution that needed additional fund or lending business or entity that has shortage in their capital. So when we say capital market, the market for longer term securities such as bonds, stocks, and mutual funds. This time is the capital market where the maturity of securities are more than 1 year, unlike money market that has maturity of less than 1 year. It is designed to finance long-term investment by business, government, and household. So, so in trading funds, the capital market possible construction of factories, highway, schools, and homes. So next is the stock market. So when it says stock market, the market for various equity securities for such stocks and warrants. So meaning to say, in stock market, they are being sold by the seller, the institution, and entity. When we say equity securities, it represents ownership shares, financial assets of investors, equity, and the issuer. Next is warrant. When we say warrant is a security which grants the holder the right, but not the obligation to buy or sell the stated number of the underlying share of stock at a specific price during a specific period of time. So just like stock, warranties is also a security. A warrant gives the investor the right but not the obligation to buy or sell the stated number of specific underlying share of stock from the company. Meaning to say that when the buyer bought the warrant, the holder has the right but not the obligation to buy or sell those specified shares of stocks run by specified price during a specified period of time. So when we say bond market, it is the market for a long-term instrument such as treasury notes, T-notes, treasury bonds, municipal bonds, mortgage bonds, and debentures. Okay, whichever is the one issued the securities, he is the one that is liable. That's why it's called debt securities or debt instrument. So next will be derivative market. So when we say derivative market, it is the instrument whose value are derived from another underlying assets. Example of derivative are options or future contracts. So when we say derivative is a financial instrument that derives its value from the movement in commodity price, foreign exchange rate, and interest rate of underlying asset or financial instrument. Therefore, as a financial instrument, the value of it depends on the movement of commodity price, foreign exchange rate, and interest rate of the underlying financial instruments. Actually, derivative is an extraordinary contract, meaning it is not a transaction but it's an exchange of promises about future action expressed in a simplest term. So, what are the characteristics of a good security market? First is transparent, liquid, internally efficient, and externally efficient. So, when we say transparent, one attribute of a good security market is equal and fair access to the information. All participants in the market must have the access to the information. Of course, it is not enough that there is only a fair and equal information, but also timely and accurate information. For example, the buyer or the participant must know the exact amount or price of the securities from the previous transaction versus the price of the securities in the current transaction. So when we say liquid, another feature of good market is the securities can be traded quickly at the price close to the price of the previous transaction. It means that the securities on the market can be easily to sell, and at the same time, the price of the security now is not far or what is not much difference from the previous transaction. Okay, so internally efficient is a good market show entire low transaction cost, while externally efficient is a good market is one more prices adjust quickly to the new information such as the prevailing price reflects all available information regarding security. So in internally efficient as much as possible, the low transaction cost must be lower. Example of that is when you transfer the securities from the issuer to the buyer, and externally efficient naman is when the price can be flexible in a given situation. Okay, so organization security market can be classified first into a primary market. Example of that is the corporate equity under securities, government securities, municipal bonds, mutual bonds, secondary market, the exchange, the over-the-counter market, OTC market, third market, and the fourth market. So when we say primary market, it's a primary markets where the issued stocks and bonds are sold by the corporation, national government, and the government units. So this is that market where the initial issue or the first issue of stocks and bonds are placed. Of course, these stocks and bonds are not owned by the are owned by the corporation, national government, and the local units. Okay. First is the corporate equity debt security. So in this discussion, when corporations want to issue equity and debt security, they usually hire investment bankers and to underwrite their securities. So these investment bankers are what we call the underwriters. Okay. So underwriting is what we call is the purchase of a new issue from the issuing corporation at a fixed price and the reselling of such issue to the public. The underwriter purchases the security from the issuer and then resell them to the investing public at a higher price. The difference between the selling price and the acquisition price is what we call the underwriting spread. So meaning the difference, the amount value of the difference between the acquisition price get by the underwriter from the selling price is what we call the underwriting spread. Okay. So next is the government securities. So government securities are it is the treasury bills, notes, bonds are usually introduced to the market. Though auctions, through auctions, there is a bidding between which from different underwriters or different institutions in buying that securities. Institution bid for the yield amount that they want. So after all the competitive bids are received, the government determines the start-out yield bid based on the amount of money that it wants to borrow. So when say start-out yield bids is the highest bids of the government wants to accept, meaning in competitive bid, the highest bid is the one that will win in the auction. Sometimes the government also accepts non-competitive bids which are awarded on the basis of the weighted average of all winning competitive bids. Next is the municipal bonds. New municipal bonds are issued in one of the three ways. First is the competitive bids. Usually involve sealed bids where bond issue is awarded to the underwriter with the lowest interest cost. So in these competitive bids, there is a competition or there's a bidding between different underwriter which is kung sino yung pinaka-lowest interest cost, siya po yung makakuha nung sealed bids or yung bond. Negotiate sales naman is typically involved in contractual arrangement between the issuing local government unit and the underwriter. So there is a contract between the government and the underwriter regarding on how the underwriter will sell the municipal bonds to the public. Okay? So the underwriter helps the issuer to prepare the bond issue and set the price and has the exclusive right to the market issue. Okay? Private placement naman is the sale of the bond issue directly to the investor. Meaning to say there's no intermediary or pinaka-seller. Okay? There is a direct arrangement or transaction between the issuer and the buyer. Okay? So primary market is the mutual fund. So when we say mutual funds, it is a fund of pools of money collected from many investors for the purpose of investing stocks, bonds, and other securities. Mutual funds are owned by the group of investors and managed by professional. Closed-end investment companies issue the share much like ordinary corporation issuing new shares. They make use of underwriters to sell their shares during an offering period. While the open-end investment companies, however, are unique in that they continuously sell new shares every day through various distribution outlets such as broker, dealers, financial advisors, and salesmen. So in a closed-end investment naman, the difference between the two closed-end is there is a specific period of time when the local, The investment company will issue shares, while in the open, it is continuously selling new shares every day. The closed end use the underwriter to sell their shares, while the open end use the intermediaries like the brokers, dealers, financial advisors, and salesmen in selling their shares. Secondary market. Secondary market is an increase for security that have already been introduced in the marketplace. So, the difference between the primary market and the secondary market is the new issued, while in the secondary market, the securities are not newly issued. The securities in the secondary market have been issued in the past. Okay? It plays an important role in providing liquidity for investors, particularly for those who initially purchase the securities in the primary market. When we say exchange, an exchange is a centralized market for secondary trading of stocks, bonds, and other securities. The issue must be approved for listing before it can be traded or exchanged. Okay, so the issue must be approved for the listing before it can be traded on exchange. There is an approval process before the security will be sold or buy. So most of countries have single security exchange, but in more advanced market, there are be one or more national exchange and several regional exchanges. So in the Philippines, we have the Philippine Stock Exchange or the PSE. So next is the over-the-counter market or the OTC market. So when we say over-the-counter market, it's the market that for securities that are not listed in the exchange. Note that the broad definition of OTC trading is a transaction that is not consummated on the exchange and therefore includes the third market transaction. Okay, the trading of securities in the OTC market is not listed in exchange, or here in the Philippines, it is the Philippine Stock Exchange. Next is the third market. The term third market is described the over-the-counter trading of security listed on the exchange. Okay, noted that in some countries, OTC tradings of securities listed on an exchange is not permitted. Okay, so so it follows that in the Philippines, that all security must be issued on the Philippine Stock Exchange. And last is the fourth market. Fourth market is a term for market is used to describe the direct trading of securities between two parties without broker intermediation. So when we say broker, it's someone who buy and sell the securities for the account of others. In fourth market, the securities directly traded without the help of the intermediaries like the broker. One party sells securities direct from another party. So that's the end of my report.